Ever feel like your bank account is slowly bleeding money, even when you're not actively spending? You're diligently tracking your expenses, but there's a small, recurring drain that you just can't seem to pinpoint. Could it be monthly maintenance fees? Are those even still a thing with checking accounts? That's exactly what we're diving into today. We're going to explore the world of checking account fees, specifically focusing on whether monthly maintenance fees are still prevalent, how they work, and, most importantly, how you can avoid them. Now, before we get into the nitty-gritty, let's paint a quick picture. Imagine you're saving up for that dream vacation or maybe a down payment on a car. Every little bit counts, right? So, discovering that a chunk of your hard-earned cash is vanishing each month simply for the privilege of having a checking account can be incredibly frustrating. It's like finding a leak in your savings bucket, a slow but steady drain that can significantly impact your financial goals. So, the burning question, are monthly maintenance fees still common? The short answer is yes, they definitely still exist. While some banks have moved away from them, particularly for basic checking accounts, many others continue to charge them. These fees can range from a few dollars to upwards of $25 or even more per month, depending on the bank and the type of account you have. Over the course of a year, those fees can really add up, potentially costing you hundreds of dollars that could be put towards your savings or other financial priorities. Now, why do banks charge these fees? Well, the official explanation is that these fees cover the costs associated with maintaining your account. This includes things like processing transactions, providing customer service, and maintaining the infrastructure needed to keep your account running smoothly. In some cases, this might be a valid argument. However, for many of us, especially in today's digital age, where online banking and automated transactions are the norm, it can feel like an unnecessary burden. The good news is that not all checking accounts come with monthly maintenance fees. Many banks offer what are often called free checking accounts, which typically don't have these monthly charges. However, it's crucial to understand that free doesn't always mean completely free. These accounts might come with other restrictions or requirements that you need to be aware of. So, what are some common ways to avoid these pesky monthly fees? The most common method is to meet certain requirements set by the bank. These requirements can vary, but they often include maintaining a minimum balance. This is perhaps the most common requirement. The bank sets a minimum amount of money that you need to keep in your checking account at all times. If your balance falls below this minimum, you'll be hit with the monthly fee. The minimum balance requirement can vary significantly depending on the bank and the account type. It could be a few $100s or several thousand. Setting up direct deposit. Some banks waive the monthly fee if you have a certain amount of money directly deposited into your account each month, such as your paycheck. This is beneficial for both the bank and the customer. It ensures a consistent flow of funds for the bank, and it provides a convenient way for customers to manage their finances. Making a certain number of debit card transactions. Another common requirement is to make a minimum number of debit card purchases each month. This encourages customers to use their debit cards, which generates transaction fees for the bank. Using online banking. Some banks offer fee waivers for customers who actively use their online banking platform. This encourages the use of digital services, which can reduce the bank's operational costs. Linking multiple accounts. Some banks offer waivers if you have multiple accounts with them, such as a checking account, savings account, and credit card. This encourages customers to consolidate their banking with one institution. Now, let's talk about the different types of checking accounts and how they might be affected by fees. There are several common types, including basic checking accounts. These are typically the most straightforward accounts, often designed for everyday transactions. They may or may not have monthly maintenance fees, so it's essential to check the specific terms and conditions. Interest-bearing checking accounts. These accounts pay interest on your balance, which can be a nice perk. However, they often come with higher minimum balance requirements or other conditions to avoid monthly fees. Student checking accounts. These accounts are designed specifically for students and often come with special perks, such as no monthly fees or lower minimum balance requirements. However, they usually have an age limit or require proof of student status. Senior checking accounts. Similar to student accounts, these are designed for senior citizens and may offer special benefits, including waived or reduced monthly fees. Premium checking accounts. These accounts offer a wider range of features and benefits, such as higher interest rates, personalized service, and waived fees for other services. However, they typically come with higher monthly fees or more stringent requirements to waive them. So, how do you go about finding a checking account that's right for you and avoids those pesky fees? Here are a few tips. Shop around. Don't settle for the first bank you come across. Compare the fees, requirements, and features of different banks and credit unions to find the best fit for your needs. Read the fine print. Don't just rely on the advertised benefits. Carefully review the terms and conditions of any account you're considering, paying close attention to the fee schedule and any requirements for waiving fees. Consider a credit union. Credit unions are member-owned financial institutions that often offer lower fees and more personalized service than traditional banks. Ask questions. Don't hesitate to contact the bank or credit union directly to ask about their fees and requirements. Make sure you understand all the details before opening an account. Negotiate. In some cases, you might be able to negotiate lower fees or better terms, especially if you have a good credit history or a large deposit. Finally, remember that your financial needs and circumstances may change over time. It's a good idea to periodically review your checking account to ensure that it still meets your needs and that you're not paying unnecessary fees. If your needs change, don't hesitate to switch to a different account or bank. With that said, thanks for watching, and until next time.